Hey there, good morning. I just wanted to quickly go over a couple of the setups I took yesterday on the ES. You guys have to definitely be willing to adjust if NQ is very wild and whippy and you don't want to have to use a big stop, then you can always trade something else. ES is usually pretty nice because it usually gives you plenty of time to exit if it's not going in your direction. The other thing, too, to remember is that you can sim trade anything to stay in practice because it's really important to stay in tune. And just make sure that you are trading your sim account as if it were your live cash account and still track and record your trades. And then the other option is to trade the micros. The micros are, another definite option, and they're worth 1/10 of what the regular E-minis are. So you do have lots of options out there, so you can still be able to trade. Okay, so let me just quickly show you these. Okay, so what you're looking at is ES. This is on a 5-range chart. You could trade it on whatever you want. You can use something bigger, something smaller. The key with trading off range charts is that you want something that's large enough to where you're not getting a lot of noise, and so that's going to be different for everybody. I've got a 5. You can use a 6, a 7, an 8, a 2, a 3. It doesn't matter. It's totally up to you. The smaller the range chart, the more noise, of course. Okay, so this is a trade that I passed on yesterday morning. This was it short down into the previous day's low, and then it's still pretty early here. It's like 9:39, 9:38. And, if you decided that there was enough room to the low from the previous day and you wanted to attempt it, obviously you could. Using my, double stochastic, as always, this is for the slinky setup, and I use it on the 1-minute setup as well. And this is telling me with the spread here between the two stochastics that price is likely to stall or bounce. And so with that being so close to support, I would have to assume that that would be the area that it could struggle. So for me, just not enough room to attempt it. You get a buy here, and this looks good up to this area here at 78.25 if it could get there. I marked a couple areas where there were some resistance. My volume profile is not showing over here because I scrolled over. But if there was a high volume area there, then I mark it, anticipating that that's where price is likely to get stuck. And the thing about support and resistance is it doesn't mean you can't take the trade. Just decide if there's enough room for you to want to attempt it. Okay, and that's the bottom line. Only you can decide that. Here, the short, getting below the super trend, not really interested because we're still in that support area here. So the first trade that I took on ES was a little further back. We had news at 10, so I won't trade into news reports. It's just a personal preference. And if you look at a bigger chart, you can get an idea of what direction the market was going. Obviously, you could see this gray dotted line up here. So we're creating new highs here, and the overall direction obviously is up, right? So I'm going to be careful with any shorts that I take. And so here, this was a short that set up against the overall trend. Not saying obviously that you can't take it. You're just going to want to be aware of, okay, hey, I'm in an uptrend. We're due for a pullback, so if I take this short, how much can I look to get out of it? And so in looking at this, I would look over at this general area here and here and decide if it was worth the risk or not. So again, totally up to the individual. I took this buy here in line for the buy here with my stochastic. I know resistance is up in this general area here around 97.50, and if it can get through there, then I would be looking up at the high of the day. So that was one that I liked here that I took, and obviously it held resistance and pulled back. So that was my exit up in that general area of resistance. And still the overall direction is up, so any shorts that you take, you're just going to be a little cautious of the reference areas. The next trade that I took was actually off the 1 minute, so let me get to that real quick. So here it is on the 1 minute. This is the setup here. It's valid here. So I put my buy stop a tick or two above that super trend stop, and then I would be looking over in this area here as the first possible resistance area, right? You can see it here, and you can see it here, and then you can see it here. So at least it has to go on my radar, right? So you take your entry, and currently I'm only trading one contract because the stops have had to have been larger. So you have a couple options. Exit up there around the 92.50 and have your limit order sitting there, or wait for price to get through it and then pull your stop up under that area. And you can see it creates a new high of the day here. And then you can always look for pullbacks too. If you know you've got a strong trend, you can look for pullbacks on your range chart to enter in the direction that price is already going, or look for pullbacks on a smaller time-based chart, or even a 5-minute chart. The bigger the chart, the bigger the stop. So that's obviously only, I know I keep saying that, but you guys have to obviously make some decisions based on your own risk tolerance as well, right? There's no cookie cutter solutions here, you guys. I wish there were, but there's not. Okay, and then the next trade that I took was here on the range chart. And so I get a buy here, and this was around 10:51 was the time. And we know we've got the high of the day above us. We know that we've been trending higher. So typically unless you have like a really strong trending day, when we get a new high, it usually, or low for that matter, it'll new high, pull back, new high, pull back, etc. So going into this trade, we'd be looking at the high area where that gray dash line is here as the ideal target, and then obviously if you can hold on as it creeps its way up, then you can trail your stop. And so this was in line here, and then once in and it triggered, you can see I get my 40-point space between my stochastics here. So what that's telling me is that, okay, now I'm in this trade long, and price is likely to go sideways or pull back a little before it can continue higher until that space is filled. And as crazy as that sounds, you guys, that is really reliable. Okay, so that's what I took. And then you can see here in the area over here to the left, that is right where price initially hung up. So once price is through that area, you can pull your stop up there or use that as your target area. So in my opinion, support and resistance is always going to dictate whether you're going to take the trade or not. So if there's enough room, you take it. If there's not, then you wait till it gets through, and then you look for a new opportunity. And then you get a short here. Not really interested in shorts, even though you can capitalize on those price pullbacks. And you would just, again, as always, look to the left, see where price is likely to react, and decide if it's worth going against the overall direction. All right, you guys, I hope you find that helpful. I'm working on revising the 5-minute opening range trade. We haven't traded it for quite a few years since it got really volatile because the stops were way too huge. And so working on that to see if we can implement that again. That was a nice, easy, no-brainer type of trade. The problem that I'm running into is that right when I decided that the market had calmed down enough to possibly implement that again, it went berserko again, so going back to huge, large ranges. So I'll have to see if I can fine-tune that or not. And once I do, I will let you know. All right, you guys, hope you have a fabulous day. And any questions, just send me an email. Have a great one, you guys.